What's up guys, welcome back to another video. Today we're going to be talking about a really simple entry and exit style using Bollinger Bands and price action in the currency market. And this is going to specialize mostly in range bound markets. So stay tuned, we're going to talk all about this strategy. I'm going to give you the ins and outs and let's get into it right now. Welcome back guys to my channel. My name is Nick and I talk all about trading and investing, and I try and keep it real when it comes to currencies because there's a lot of hype and a lot of fake stuff out there. We just talk real trading, and today we're going to talk about a really basic sort of entry and exit style that a trader might be able to use using Bollinger Bands. Now if you like Bollinger Bands, this might be the video for you. If you don't, or you don't know much about them, stay tuned and maybe you can learn something about how to use them better, or whether or not they might be something that you want to look more into. Now what I'm going to say is that this strategy is mostly for sideways markets, range bound markets. Now we can pretty quickly identify that there's sort of only three major styles of market environments. We have uptrends where things are strongly pushing to the upside. You have downtrends where things are trending lower, going down over time. And then you have sideways markets where things are basically just going back and forth and they're going nowhere. And this actually happens a lot of the time when it comes to currency trading. Most of the time currencies are in a stage of consolidation, sideways, range bound, whatever you want to call it. They're just not moving a whole lot and they're just kind of trading back and forth, respecting levels of supply and demand, and just not really going anywhere strongly. Now I should add that whatever strategy that I use, I always sort of keep fundamentals at the core of what I do. So for what I mean by that is, I use indicators and price action to sort of get in and out of the markets, but I use fundamentals and the analysis of what is going on in the world, right? Things like interest rates and CPI numbers and all that sort of good stuff to gauge a general direction for the market I'm looking. So I should say that first is, I'm going with macro trends. I'm trying to identify the direction of a market based on what is fundamentally going on with the underlying currency or economy that we are looking at. So that's one thing that's really important. If you don't know a whole lot about that, I'm working on a playlist. By the time you see this video, it might be underway, but you should be able to go to the playlist section and find something on my channel about fundamental analysis. I'm adding to that and working on that at the time of making this video. Anyways, this video is going to be talking about the entry and exit style using Bollinger Bands. So now that I got the point out of the way about using fundamental analysis to assist in the directional bias that I might take in a market, now we're going to talk about the sideways sort of market environment that we can trade. Let's say that you are looking at something like dollar Swiss, which for the most part it seems like a very, very tame and back and forth pair. A lot of the times dollar Swiss is just kind of a choppy pair. Occasionally it will trend off in one direction, but a lot of times it's just back and forth. And we can actually see this if we go to the weekly chart. Check this out. If we go to the weekly chart on USD Swiss, you can notice that this pair doesn't really go a whole lot. We're trading at the same time now here in 2021 as we were in March of 2011. We haven't moved all that much on this pair. We've gone up, down, and kind of just stayed in the same general area. So using this sort of strategy is probably going to favor currency pairs or markets or charts or whatever you're trading that are mostly in a back and forth sort of style of trading. We might not want to use this on something like GBP JPY, which has trended really, really strongly and gone up for many years, right? And we might not want to use the same strategy on something like that. So USD Swiss seems like a pretty good candidate for this strategy. Okay, we'll drop it back down to the 4-hour chart, which I think is probably my favorite chart level to trade this sort of approach, although it can be traded on any time frame. Now we've got our Bollinger Band, and I've just stuck the normal Bollinger Band on here. That's a 20 period or 20 moving average Bollinger Band, which then prints a 2 standard deviation. So basically what it's saying is that this upper line and lower line are within 2 standard deviations of the current volatility in the market. Now what you'll see is that the Bollinger Band shrinks when things are calm and it expands when things are more wild. You can see, for example, over here that the Bollinger Band becomes much larger during these big swings, whereas during times of calmness, we're seeing small sort of consolidated Bollinger Bands. we are actually going to be preferring in this style to use it during these more tightly constricted Bollinger Bands areas. In fact, when it expands, this strategy probably is not going to perform super well. So that should be addressed as well. What we're going to do is we're going to look for a key level of support, resistance, supply and demand, whatever you want to call it. We're going to look for areas on the charts where there's been strong historical pivot levels, and we're going to try and take trades back and forth, meaning if it's trending up, we're going to look for shorts, and if it's trending down, we're going to look for longs. Why would we do that? Well, it's because if we're in a sideways market, a lot of times that is likely to continue, and so we can use that to our advantage. So for example, let's say that we identified this area, and of course I'm using hindsight in my favor. I know that as I say this, or as I show this video, you know, people will say, well, you're just looking in hindsight, you're just showing the perfect examples, and that is true, and that no entry style will work perfectly. There's no holy grail entry and exit style to my knowledge, and I've been doing this for a while. But more importantly, we can address the fact that you know, sometimes it's going to work, sometimes it's not, and what's more important is that overall we are making money, we are making more than we're losing by sort of using this strategy in combination with whatever else goes into our analysis phase. Anyways, so now that we've highlighted a key area, you can see, you know, we've multiple times come up to this point and found resistance or sell pressure in this area. Well, maybe on the time that we come back up to this area, maybe we start looking for short setups in this historical zone, especially now that we see that each time it comes up to there, we're met with a lot of resistance, and in the overall market environment here on the 4-hour chart, we're in a sideways range-bound market. Now, the next step is once we've identified that key area, we may look for some sort of extension outside of the Bollinger Band in order for us to look for some sort of short setup. And there's two main ways that you can look for this. Number one, some people will like to use the Bollinger Band and just say, hey, if it just reaches the extreme, I will go ahead and sell. Right? So in this case, selling on the touch of the extension here of the Bollinger Band, meaning that as price comes up into this point here, see how it's tagging that Bollinger Band, the upper limit? They're saying, okay, it's reached the extreme of the standard deviation of price, and so good chance we could see a reversal, and we sure did. The other way to do this is to look for some sort of confirmation in addition to reaching the extreme. So the Bollinger Band comes into play because we're looking for an extension to the upper or lower extreme of this move, plus a key level on the chart, and some traders may even want to add confirmation to that, meaning looking for some sort of candlestick pattern like we see here, a bearish engulfing pattern. Or another scenario is right over here. You can see we have a couple dojis in there / pin bars. You can see kind of the rejection. Look at all the wicks being formed here, right? That could be a signal to go short in favor of the sideways market, meaning that we've reached an upper extreme. Good chance we see some sort of pullback. We see a give back of the market. So that is sort of the style there. In this case, I even like this trade a lot too, because you can kind of see that we've reached the upper extreme and we've even closed outside of the upper extreme. That is all this area is a lot of rejection. You can see lots of candle wicks on the top showing that every time buyers tried to push price past this level, sellers got involved. And you can see we then shot down to the other direction. So now that's the sort of entry style, is we're looking for a key level or key support or resistance level plus an extreme move to the upper or lower band of the Bollinger Band. And then we're looking to try and get involved on the opposite direction, right? So if it's reaching the upper limits in a sideways market, we're going to look to sell that. And then in a lower extension to the downside, maybe we're looking to buy that at key support, right? You could make the argument that, hey, here's some strong support in this area. And again, I know that this is you know, cherry picking. We're only looking at the good examples. We'll take a look at a bad example in just a second. In fact, you know what? Let's do that now. Let's talk about the downside, because the strategy is no good if you just talk about the upside. You've got to talk about the downside and times that this is not going to work out. Times that this is not going to work out is when the market really gets trending. Now, we mentioned earlier that a lot of times the market does not spend a lot of time trending. We spend a lot of time back and forth in the currency market, but also just financial markets in general. A lot of times we spend time just consolidating and going back and forth. So this strategy can have a pretty good win rate due to this, because we're trading back and forth. So when price moves up, we're looking to sell and fade into it. When it goes down, we're looking to buy, go into it. And a lot of times that works out more often than not. However, every once in a while we get caught up in a losing trade. And you can see here's an example of one that went really poorly. Let's say that we got into the short sell here as we reached that same level, which did work out multiple times before, but this time it didn't work out. This time, let's say you got short here, you can see price rallied right against you and it broke out really strongly. This is a scenario where we don't want to try and use this sort of back and forth style because of how trendy the market has picked up. When this is trending, when this chart or any chart is trending, this strategy is not going to perform well. However, this is the give and take of any sort of trading strategy. There are times where certain strategies work great, and there are times where they don't work great. And we have to identify what type of strategy are we doing. A mean reversion strategy like this one where we're looking to fade extremes, or are we looking for a trend following strategy, which is not this one. And in this case, maybe we want to start looking for trend following strategies, plenty of which on my channel I've talked about, some of the strategies that I use that are trend following. You can check those out if you want on my channel as well. But with that said, that's the strategy, that's the entry style. But what about the exit style? The last part of this is talking about exits. And there's a couple different ways that we can use or we can plan for some exits. Going back to our trade examples here and here, we can say, okay, we've gotten a decent entry, but where do we look to get out? How do we capture the most of this move? And there's a couple different ways that you can do this. You could theoretically, if you're in a range bound market, trade to go back to the bottom of the range, which the bottom of the range you could argue would be like this area here, right? Or you could argue, if you extended this past back here, we can make that green, right? That's kind of the bottom of this range. As we reach the peak, we could say, okay, I'd probably go for a supportive level. So look for a key support where price could just bounce back. Because again, when we're in that range bound market, things are very likely to reverse and come back up and just go back and forth, right? So looking for some sort of target area like this could be reasonable. Now, adding on to that, using this as a target gives us a decent idea for stop losses too. Because if we were to say, okay, if price, let's say we sold at the top here towards, on the touch of this upper extension and in combination with this would be, I know I'm cherry picking a lot here because these are like perfect entry style or entry examples. This is not how all of your trades is going to go, and I wouldn't want to try and make it sound like that. But let's just assume that you're having a great trading day and you picked the perfect spot. If you did, you can see this gives us a pretty reasonable risk to reward. We can see that, by putting a stop just above structure here, giving it a little bit of room and targeting the bottom of this range or this key support zone that we see, we can see rejection here, support here, right? We get an idea that, okay, maybe that's a decent area to look for. Then that gives us a pretty good risk to reward. That's like 2.5 to 1. So not bad, right? And then going to our the second example here, you can see it's almost the same setup, just with a little bit more rejection. I like this second one even more. And you can see that we eventually made it down to this low point, which would have been a nice take profit. So that's using support and resistance to get out of your trades, key zones on the chart to get out of your trades. But there's another way you could do it that's a little bit simpler, I guess, is looking for just a move back to the middle band or the 20 period simple moving average, which is this brown line on my chart. It might look different for you, but I just have the default settings here on TradingView for Bollinger Bands. So in this case, maybe we go for a 2 to 1, and you can see we're just targeting a pullback. Right? We're just looking for a quick move in and out of the market on this example. Now we can do the same concept. We can drag this over here, and let's say that we took, a short sell at the top of this range, and at the Bollinger Band. It gives us a much, tighter trade. But you can see if you're willing to, in this case, technically a 2 to 1 actually wouldn't have worked out. Right? Because if you're targeting this middle band, you might have to adjust your target as it's going along, because again, initially the brown line is down here, but then as price comes down up to it, it would have ended up being here. So it kind of makes risk reward a little bit tricky because your target is changing. So that is not as, in my opinion, not as ideal as using key support and resistance, which is more how I would trade it. You can also, finally, you could use the bottom extension of the range, but these are all things that you should test on your own on the individual currency pair and time frame you're using, because maybe things work better or worse on different time frames. Finally, like I said in the beginning of the video, fundamental analysis plays a part in any of my sort of trades that I take. So if I'm super bearish on the US dollar like I am right now, I'm probably not going to take long positions at this time. That might change in the future based on, you know, stuff that comes out and CPI numbers and inflation and all that stuff, right? That might change, but my bias fundamentally will impact my sort of entry style on this. Just 2 cents, guys, just a little strategy idea for you. I encourage you to go test any concepts that you see from my channel or anyone else on the internet. Don't trust anybody blindly. Go do your research. You don't need to spend a bunch of money to learn to trade. There's plenty of ideas being shared online for free, but I would encourage you, go back test these concepts, go look into them yourselves, and let me know what you find down below in the comments. Thank you so much for watching, and have a great rest of your day.